Good afternoon, and thank you for your interest. I am Mark Reichman, Noble's Senior Research Analyst covering the metals and mining sector. I will be moderating our panel discussion entitled Current Market Conditions and Trends in Metals and Mining. We will have plenty of time at the end for questions and answers. Our panelists include Peter Gianulis, President and CEO, Allegiant Gold Limited, which trades on the Toronto Venture Exchange under the ticker AUAU, and in the U.S. on the OTCQX under the symbol AUXXF. We also have David Kelley, CEO, President, and Director of Chakana Copper, which trades on the TSX Venture Exchange under the ticker PERU and on the OTCQB under the ticker CHKKF. In addition, we also have Robert Archer, CEO of Newrange Gold, which trades on the Toronto Venture Exchange under the ticker NRG and over-the-counter under the ticker NRGOF. Lastly, we have Luis Marchese, CEO of Sierra Metals, which trades on the TSX under the symbol SMT and on the New York Stock Exchange under the ticker SMTS. So before we start our discussion, I will call on each panelist to provide a 60-second introduction of their company, and we'll go in alphabetical order by company. So we'll start with you, Peter.
Thank you, Mark. Quickly about Allegiant Gold. Allegiant Gold is a U.S.-based and focused mid-stage gold exploration company developing its flagship Eastside project with 1 million ounces of inferred gold resources near the town of Tonopah, Nevada. We are in the process of expanding the resource beyond the 1 million ounces with the goal of reaching up to 2 million ounces in the next 12 to 24 months. Thank you.
David?
Thanks, Mark, and thanks for the invitation to be here today. Chakana Copper is a company focused on advancing the Soledad discovery we've made in Ancash, Peru. It's a copper, gold, silver discovery. It's hosted in tourmaline breccia pipes. It's a very interesting deposit type, and it has huge upside potential. We've already drilled 35,000 meters to date, and we have a 15,000 meter program ongoing now, which will lead ultimately this year to the first maiden resource for that project. And there's lots of information that's been put out recently, and happy to follow up with any interested parties on telling them more about Chakana.
Bob?
Thanks, Mark. Good afternoon, everybody. Newrange Gold is a junior gold explorer focused on two of the most prolific gold-producing regions in North America, Nevada and Red Lake area of Northern Ontario. Our flagship project is the past-producing Pamlico district in west central Nevada on the Walker Lane trend. And we're currently drilling there right now. We've got a reverse circulation drill program underway. And just recently made a relatively new discovery of sorts in which changed our interpretation of the project and leading us towards what we think is an intrusive related model with very significant size potential. So looking forward to following up on that in 2021. And we're just about to embark on a winter program up on our North Birch project in the Red Lake area of Northern Ontario. And that's an iron formation hosted gold target, much like the Musselwhite mine or the Homestake mine down in South Dakota. So with an 8-kilometer long trend on that target, we're excited to get going on that as well. So lots of positive news flow, and we're cashed up for the next several months for both those projects. Thanks, Mark.
Well, Sierra Metals is a mid-tier diversified producers. We produce 5 metals in 3 mines, 1 in Peru and 2 in Mexico. The 5 metals are copper, which is 40% of our revenue, zinc 20%, silver 20%, gold 10%, and lead 10%. Our production is in the order of 120 million copper equivalent pounds. 60% of our revenue comes from Yauricocha here in Peru, which has the 5 metals. 30% comes from Bolivar, which is mostly copper with gold and silver. And 10% of the revenue comes from Cusi, which is our small silver mine down in Mexico, in Chihuahua. We have an exciting growth story coming ahead. We just released 3 PEAs, which pretty much have shown that we can almost double our throughput in the 3 mines and at a very attractive return. So that's where we are busy now.
I wanted to start off talking about the commodity price environment. You know, obviously we've had a pretty good run in precious metals prices. And so, Peter, what do you see as the catalyst for moving gold prices higher?
Well, I think there's a few components. I mean, everyone will point to the one that is mostly discussed, such as monetary debasement and just gold prices going up or any other commodity prices going up as currencies are debased, more than the focus on US dollar being debased. And I'm always getting into a discussion on whether the US dollar is going up or down. I'm a firm believer the US dollar is going to actually strengthen, but that doesn't necessarily mean the commodity prices are going to go down. All currencies are being debased. So it's not whether the US dollar is going up or down, it's whether currencies as a group are being debased. And what this pandemic will show, and I believe this is what's occurring, is that every country is debasing their currency. The US obviously has a major advantage, is that they're able to export 60, 70, 80% of the currency that they create. So henceforth, they don't have the inflationary effects that most other currencies, like if Peru does it, you know, Peru is going to feel the effect. No one wants soles anywhere except in Peru. And in Colombia, they produce a peso. No one wants pesos except the ones that are in Colombia. So I would say 1, currency debasement; 2, in the case of gold and potentially in the case of copper and silver, just a lack of development and lack of discoveries that have occurred over the last 10, 15 years, and particularly this most recent downturn, which lasted 10 years, just led to a very small amount of capital being employed into exploration projects. And so I think you can point to gold, silver, and copper, and potentially zinc as well, as a lack of investment. And I would think that those 2 main aspects. And then in the case of gold and silver, you have the investment demand side of it. And I think gold and silver have suffered at the hands of, say, the digital currencies, the Bitcoins of the world, which have pulled out investment demand. And I think that what investors should be watching out for is my strong belief and that the Bitcoins of the world and that will collapse in the next 12 to 18 months, and primarily for other reasons which I won't go into, but because that's another 5-minute conversation or 10. And in that case, I think gold will pick up once again its luster as that safe haven for investors. And there's an entire different market that, you know, call it the millennials, the Generation Zs, who have no idea what gold or what the purpose of gold is, and they'll probably find that out in the next few years.
Bob, as the founder of Great Panther, you've had experience with both silver and gold. Do you think the gold to silver ratio will narrow? And if so, what are the catalysts?
Yeah, I think it will over time, Mark. I mean, as you know, they're both largely driven by investment demand in terms of the pricing. But you know, silver also has that industrial component to it, which is often related to just economic strength in general. And you know, with economies around the world looking to improve as we come out of the pandemic, you know, we've seen the price of copper come up, reflecting that. Then, you know, I think the silver price will react, you know, well to that pricing environment. But in terms of the ratio between the two and the differences there, one of the things that we saw in the last bull market, essentially from about 2003 through to 2011, was that although, you know, gold, well, they're both very volatile, but silver is much more so because it's a much smaller market. And although, you know, gold will sort of generally rise or did rise through that whole period, the way silver tends to trade, or at least through that period, I'm seeing already similarities now is that it trades in a sort of a hockey stick pattern where you get a period where it sort of range bound, sort of consolidates, and then suddenly it just goes parabolic. And that whole cycle took about 18 months or so, and we saw that repeated 4 to 5 times through the last bull market. And so every time it goes parabolic is where you really see the big change in the gold silver ratio, and so it starts to pull back, favoring silver on each of those rises. And then after it peaks, it comes down very quickly also, but it only drops about 50% from the last base, if you like. And then it's range bound again for another period, and then it does that parabolic rise again. So we saw that last year where everything just took off in July, August, and went almost straight up for a little while, and then came down just as quickly. And so here we are now at roughly 50% above where we started that cycle. So I think we'll see that continue, but over a period of time, the ratio will tend to favor silver over gold.
Thank you for that. And Louise, how is the trend toward cleaner forms of energy impacting demand for base metals?
Well, there are a few calculations on that, Mark, and I just read one that they are expecting that in order to get to the scenario of 2 degrees plus by 2040, 2050, you will need another additional 25 million tons of copper in the market by then. That's the current production of copper in the world is around 21 million. Okay, so another 25 million is a phenomenal endeavor, and that would cost, in terms of investment, over $200 billion, if not more. So what you're saying is that the rate of development of copper producing mines should be quite aggressive, which we don't see much. As Peter was saying, there hasn't been much exploration, and these projects take a few years to go on. So copper is going to be one of the commodities that's going to be certainly positively affected in its demand by the green economy. And the other is silver. I mean, you use quite a bit of silver in solar panels as well. So eventually the industrial use of silver is going to pick up over time if we want to move more and more into solar. So I think it's exciting times are coming, which actually are going to require some more important supply from these base metals and others, nickel and others.
So David, do you think Tesla is right to be worried about future copper supplies?
Well, yeah, I saw that question mark, and you had copper and nickel in there. I mean, it's certainly for nickel. Nickel is a much rarer deposit type. It occurs in fewer geologic environments. Copper has a much broader distribution globally in different deposit styles, but I still think the demand is going to way outstrip the production for the reasons we've already discussed here, and there has been an underinvestment in exploration for all metals, in my opinion, and the pipeline, if you look at nickel, zinc, copper, the pipeline is pretty barren, and we see a lot of the big mines going out of production. The head grades are dropping, and deposits are getting harder to find, and they're oftentimes deeper than previous discoveries were made. So it is getting harder and not easier to bring new projects on, and I think the supply of any of these metals should be a great concern, because it's even when you look at the environmental regulatory environment and just permitting delays and that type of thing, we can't bring projects on as fast as the market demands these days, and it just becomes more challenging.
I wanted to pivot to talk a little bit about kind of the environment for mining companies. Obviously, with the rise in metals prices, activity has certainly increased. There's been a lot more exploration. So with the boom in exploration, we have seen kind of laboratory turnaround times increase. I was just curious, Bob, are turnaround times getting better? And what other challenges are you seeing in the market right now?
We haven't really seen turnaround times getting better, Mark. It's a combination of, the impact that the pandemic's had on staffing. When a number of your staff at a small operation gets infected, and then everyone has to isolate. You got to bring in new staff and train them, and so on and so on. That has a big impact on productivity. And at the same time, over the last 8 months or so, we've seen such an improvement in capital markets that it's much easier for companies to finance. So now there's more money for exploration for the juniors, and with higher metal prices, the producers are making a lot more money, so their exploration budgets have increased to the point where everybody is doing a lot more drilling, sampling, and so on. So, the volume of samples going to the labs has increased significantly, and it's created a huge backlog. So, I don't see that we're going to have much of an improvement in that anytime soon. I think it's going to take some time before the labs are able to increase their staff, increase their throughput, that sort of thing, to really improve that overall situation.
Well, you're right to bring up COVID, because that's been obviously a big impediment for mining companies, or at least a challenge. And Louise, with a vaccine on the horizon, how long do you think it will take to get back to normal?
It will depend on the country, Mark. Where we operate in Peru, I think it's going to take a while. And also because of the picking order. Our workforce, it's in the last group, so I think it's going to take a while until we see the effects of full vaccination in the population. 1 year, year and a half, something like that. So in the meantime, we have to keep using our strict protocols at the mines and making sure that we look after our workforce and the communities around, and try to make sure that we control the impact of the COVID in our operations.
Have you experienced much in the way of cost inflation, and if so, how are you managing that?
We're having both, because the exchange rate have helped us. Certainly, we have an added cost because of the COVID quarantine and hotels and all of that. But on the other hand, we had the opportunity to see actually better productivity on some of the processes of the mines. So it's a mixed picture as we speak. If you see our results up to the third quarter, actually in some places we have even lower costs than what we used to have. Mm-hmm. So we're still in that process. We're trying to catch the operational improvements, but while on the other hand certainly taking care of the health of the workforce and the communities.
And David, I was going to ask you, what are some examples of new technologies that are making exploration more efficient and productive?
Yeah, I guess, we deal with massive amounts of data, so certainly the ability to handle big data and process lots of information, all the geophysical approaches have gone three-dimensional in their modeling, inversion modeling, even all of our geologic modeling. I mean, we actually use Leapfrog in three-dimensional modeling more than we use just traditional GIS on our project because of the nature of our project. But then bringing in all of the different data sets and being able to analyze those and interpret those data sets collectively is, it has always been a big challenge, but, the systems are there, and it's fairly routine to be able to handle these very large complex data sets. We're certainly seeing lots of research being put into more effective drilling technologies, safer drilling technologies, the types of rod handling systems and safety systems on drill rigs where people aren't getting hurt as much, and if you're working safer, then you're working more efficiently and more cost effectively. So that's been really good. You know, I pay particular attention to exploration technology, and you know, one of the recent developments, they've always been trying to push field portability of analytical technology into the field. So to get away from this problem you just were talking about and long turnaround times. And if you can go in the field and actually get your analysis in the field, you can drastically expedite the field season, especially if you're in climates like in the Arctic, where you have a very limited field season to begin with, and you've got to get everything done as fast as possible. And if you can get results while you're still in the field, you can follow up on those results. And you know, one of the developments recently is PPB level gold determination in the field. So you can actually get those kind of analyses in the field now, and it's primarily being directed towards soil sampling and stream sediment sampling and that type of thing. But those are exciting developments when you think about some of the you know, the things that really slow down our industry and push us into another field season, when if you could have those results brought forward, you'd be able to act on those right away.
Well, certainly with the beginning with the pandemic lockdowns, we've all had to learn how to work differently.
Yeah.
And in terms of investor outreach, Peter, has the pandemic changed your thoughts about how you approach investor relations going forward? I mean, in terms of utilizing new technologies or methods, and perhaps what's worked and what hasn't worked?
It's a pretty good question. I think that we've tried to experiment and do different types of things with investors, such as, you know, the Zoom types of calls and more conference calls, as well as data room type of calls and other types of technology we've used. The reality, and this maybe I'm in the minority here, is there is nothing that substitutes kind of like, you know, boots on the ground type of review of projects, getting to see the infrastructure, getting to see your project. I mean, I've been on both sides, and I really like to be on the ground. I like to meet people, and I think people like to see projects and get to see the area that they're operating in. And in the case of us, Allegiant and Eastside, and one of the major pluses is the infrastructure. I mean, you fly in either to Las Vegas or Reno, drive 2.5 to 3.5 hours, depending on which of those cities. You get to the town of Tonopah. It's, you know, you have 4, 5, 6, 7 hotels to stay in. Then you drive 25 minutes, not even that, 20 minutes to our project. So, you know, that is really hard to substitute for. So we have incorporated videos, 3D imaging, videos, flyovers, drone technology to, you know, taking drone videos and to show our projects. But, and I think it has helped. I'm just not a big believer. You guys have to do a conference, and maybe you can answer that question. I think it's very difficult to substitute getting to meet someone, looking them in the eye, and understanding the passion they have for their project, as well as you know, trying to decipher whether they're telling you the truth or not.
I agree. And you know, certainly environmental, social, governance issues are you know, certainly a greater awareness and emphasis these days. So with emphasis increasing on ESG standards, and this question is for Louise, is that affecting governance decisions, you know, i.e. how board members are selected, or how are you kind of incorporating ESG into your framework at your company?
Well, I guess operating in Peru and Mexico, pretty much we have had that embedded for quite a while. Not necessarily in the ESG, you know, acronym, but certainly environmental, social, and governance is part of our DNA. And our board is pretty active on that front, and I think our management as well. So yeah, it's been affecting the way we operate and the way we approach our business for quite some time. And it goes on. Eh? I'd say it's got to do with where we operate in particular.
And Bob, are companies paying more attention to social license? And what do you think are the most important issues for mining companies to consider?
Yeah, I think they are overall, Mark. You know, I think I mean, some would argue that you kind of have to in order to keep operating in some places. But I think there's generally a shift as well, where and maybe it's partly age related as a newer generation comes into the industry. But I think overall there is a shift in terms of the way people look at it and think of it as more like an obligation. And this is just it's becoming the norm, where this is the way that we should operate, the way we want to operate, and whether that's engaging local communities in various ways, listening to their concerns, and providing perhaps employment opportunities. And I think it's shifted as well, to more of a listening approach, rather than the old approach where people would, do that because they felt they had to, and they would just go in and basically, throw money at a community and say, oh, well, we'll build you a school, we'll fix your road, because there was just an assumption that that's what they were supposed to do, that's what was needed. But now there's a lot more engagement. People will go in and actually sit down and meet with the community leaders and the people that are there and listen to their concerns and then react accordingly. And so it's much more integrated, I think, than it ever used to be, and I think that's a real welcome change within the industry, and I do believe it will continue. It'll get better, and of course it varies from place to place, country to country, and so on. And but I think it's a welcome change within the industry.
I just wanted to turn my attention a little bit to the capital markets environment. So has the ability to raise capital become easier with higher precious metals prices? And that's a question for Peter.
Well, it depends on it's a relative question. So is it easier than 2 years ago? Absolutely. Is it easier than 3 months ago? No. And I think that, so over what time frame it needs to be, I think is one of the more important variables. So I think that it depends. I think that projects that are in late stage exploration or development, I think things are getting easier. Obviously, mining companies probably don't need the cash in general because they're spinning off lots of cash. So I do think in general it has become easier to raise capital, and but these things go in cycles. So compared to 2-3 years ago, 5 years ago, absolutely much easier. Compared to 3 months ago, I think the markets have actually closed over a short period of time, but this is very cyclical. The window of opportunity of financing opens and closes, and at this stage, I don't think it's difficult. I just don't think it's as easy as it was, say, a year ago.
And Bob, what types of financing is most prevalent in the current environment, or most attractive?
Well, I think for junior companies, just straight equity is usually the easiest, fastest, most common way to go. Junior companies or junior explorers, at least, in my view, shouldn't be taking on debt, of any kind, really. So, that's typically not an option. In Canada, flow through has been good, and now with the new so-called charity flow through, that actually opens up flow through investments to people from other countries that never used to exist before. So that's a fairly attractive change as well. So I think we'll continue to see more of that. And as more institutional investors come back to the sector, we'll probably see more funds coming into play, more bought deals, that type of thing. So we did see some of that last year, but I think we'll see more of it going forward.
And Peter, what do you think the M&A environment looks like for 2021?
Well, once again, bifurcated. I mean, the seniors, you've seen recent announcements by Newmont and other majors, deciding to do share buybacks or increase dividends. So they're voting with from that perspective to return shareholder capital. I have no problem with that. I think that's discipline. I know other people disagree with that. I'm not against that. They do have to deal with the issue that their global resources decreasing. They're not finding new resources in the case of the gold market, which I'm discussing. But you can apply that to many other metals. In terms of the juniors, I do think that there hasn't been that much, but I do think that there is a beginning process and the early stage of increased M&A activity. I know of many that are, we're always in some level of discussions, but doesn't mean that there's anything imminent. I think that all of us on this panel probably have dealt with some type of level of M&A. Allegiant, not any different. I do believe there is going to be an increased M&A in the junior exploration market, and particularly in the gold and silver, and it is a welcomed trend, I think, as long as the rationale for that M&A makes sense. And I think that rationale means companies getting together with common interests, reducing G&A. I've been very, very vocal about the reduction of G&A as a relative to the size of the company. I think that juniors tend to, on average, run too high of a G&A. And I think by getting bigger in size helps to reduce that. And I think there's other rationales to get behind it. Exploration, rationalization of exploration expenses. Now, Allegiant, based in Nevada, with projects in Nevada, getting together with a company in Brazil probably doesn't make sense, right? Because there's really very shared geological teams, as well as just knowledge of the geological areas. So I do think, to answer your question, I think we're in the beginning stage of increased M&A in the junior sector. I think in the mining sector, I think you'll see junior and mid-tier companies get together in more M&A. So I do think we're going to see a much more active season.
Well, I enjoy your presentation, Peter, because you did talk about that you still thought the junior mining sector represented a good value for investors.
I do. Well, I mean, relative to seniors, I haven't seen such a big gap in terms of valuation disparity between those two. And so from an investor's perspective, buying a junior mining, a company that's actually producing, is a lot cheaper on a relative basis than buying a senior. Now, clearly, there's other different risks associated with that. And then if you get into the exploration sector and companies that have a resource, whether that's in the inferred or the measured and indicated category, I mean, really, on a relative basis, relative to the price of the metal in which they're exploring, whether that's gold or silver, I've been doing this for 25 years. I don't recall of one blip during BRIEX I ever recall a level so cheap on an in situ basis. So it does present a very, very good buying opportunity for investors, at least for investors that have some time horizon beyond 3 months, right? So this is a volatile sector, and I think that the investors need to, and I think management is also at fault at this, that we need to condition investors to take that 2 to 5 year time horizon. And I think that there will be investors that come back to that. And part of the reason is also the way of the structure of raising capital through these warrants, which I think is absolutely insane. But it does condition investors for that short-term investor. And I've heard all the arguments in favor of a warrant. I don't buy any of it. So I'm in the minority, but that's fine.
And David, how are exit strategies for explorers evolving?
Well, I don't know that they are evolving, Mark. I mean, I think it kind of depends on what your strategy is as a company. For Chakana, we were very clear that the expertise in the company was about exploration and discovery and advancing the project to the point that it can be developed, and that's always been a clear strategy for us. Sometimes companies get caught in whether or not they should divest the asset or whether or not they should develop it themselves. And, that there are some groups that have that option. I think it kind of depends on what the board's preference is. And it also depends on what your shareholders were brought into the company to support the strategy. And essentially their capital, comes in and allows you to execute your strategy. So I've not seen where it's really changed that much. I think we still have the same strategy, exit strategy that we had when we started. And, I don't think that's going to change.
Bob, did you have anything to add to that?
No, I think I tend to agree, Mark. I don't know that it's changed all that much. I think for a lot of juniors, both for management and major shareholders, and management are major shareholders in most cases. The exit strategy largely reflects their team, and if they're, as David says, if their strength is exploration, then really they're not likely looking to actually put something into production. They're more likely to want to see a takeout at some point. Whereas if your team is geared more towards mining engineers and financial people, then maybe they really do want to take it to production and go from there. So and I think that's pretty much always been the case. I think so. I think we'll just. But I tend to agree with Peter, though, that we will see a much more active sector going forward as things pick up.
I think we can go ahead and move to the question and answer session. So I want to remind our viewers, if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So the first question is, for the Nevada mines, there seems to be a growing push to drive more government revenues through increased taxes on the mines. What is the current status of those discussions, and what can we expect as a likely outcome? And I guess I'll let Bob start with it, and then maybe Peter, if you want to add on to that, since you're both have exposure in Nevada.
Peter might be better versed to address that than myself, Mark, in the sense that, we're still pretty early exploration, a long way from having to worry about taxes and production and so on. So it hasn't really been a big focus for us, to be honest. And I mean, we've heard a lot of the rumors of, some Democrats wanting to cut back on mining permitting and that sort of thing. But I haven't really focused much on the tax side of things. So I don't know, Peter, if you want to address that at all, or.
Sure. Yeah. Very aware of what's going on. It's a long process. I'll take the worst case scenarios that they want to push it through. Requires numerous steps that could take 2 to 10 years, including involving a vote by the general public to change some of the regulations and tax schemes. We believe that there's a possibility. We think it's low. Outside of Las Vegas, the rest of Nevada is very pro-mining, and this is being driven primarily by Las Vegas, which generates revenues through their tourists, casinos, and hotels. The rest of Nevada is very well aware that they are a mining state, and I think there's no qualms about there or even issues. It doesn't keep me up at night. It's not something that, it's not that it's not relevant, it's just a low probability event.
Okay, and then we have another question asking about the political and regulatory climate in Peru. So I think I'll go ahead and direct that to Luis.
Well, on the political side, it's been quite variable over time here. We've had, 4 presidents in the last year. But certainly, actually, the regulations have remained through the 4 presidents. So that gives a sense of different people, but sort of the similar regulations. But having said that, it's a tough environment. I mean, there is quite a bit of regulations around that can certainly delay the way we work. There is a heritage in Peru in terms of culture that many people believe that by enacting more and more regulations, you're going to fix problems. And that's not the way to fix problems. The way to fix problems is to have good practice and to do things right. And I'm not sure that by issuing more and more regulations, that's where we are going to get into. Actually, it's more about what's happening is more about stopping and delaying what we can do in the industry in Peru, where mining can do a lot for the country. We have elections this year in April, and we will have a new government in July. There are quite a number of candidates, but I guess overall we are not expecting a major shift in policy for mining.
And David, did you have anything to add?
I agree with what Luis said. Mining continues to, just seems to, be fairly stable through the different administrations, even though their platforms for getting elected are high, variable and different. When it comes right down to it, mining is such an important part of Peru's economy that, it continues to be supported and things move ahead. My biggest complaint about Peru is it's a very bureaucratic type of process to get through permitting and approvals and that type of thing. It's still very much a paper-based society. I'm actually hoping that COVID-19 has kind of helped create the impetus to look at new ways of doing business. I mean, we were able to get a permit during the pandemic when the regulatory offices were closed, and I think that was a great surprise for us. It was a great benefit for us, and I'm hoping to see more of that where things can go through without multiple levels of hierarchy and stamping papers and the notary process that happens. It really slows things down. But I think all in all, mining continues to move ahead in a fairly consistent manner in Peru just because it's such an important part of the economy.
And I had a couple questions for Luis, as one that's managing a producing, company. What is the bargaining power of unions these days, and what are they most concerned with?
Well, the bargaining power is the same bargaining power that they've had over time. It's not any different. I guess the scenario has changed because the COVID, the pandemic has created a sort of backlog in the terms of the expectations of the workers and the unions. Mm-hmm. So certainly we have a more active union in Yauricocha, in Peru, than we used to have, but that's because they have sort of had to stand still for many months. So we are, getting back to their usual aspirations.
The other question is, what are some of the hardest roles to fill in the company?
Well, all of them. All of them.
But I mean, are companies pivoting more to doing more in-house training?
Yeah, certainly we are working on that. I guess there is a lack of capacities around the industry, and with these prices, I guess our expectations is that there is going to be more and more demand for skills. Mm-hmm. So if we want to continue operating with the right skills, we've got to train more and more people. So actually, as we speak, we're doing that. We are revamping our trainee program, training for the operators and for the managers and the whole lot. So we make sure that we have a skill base for the future.
Well, I think we're going to finish up a little early, and I just want to thank everyone for their participation.
Thanks very much, Mark.
Thank you, Mark.
Pleasure to be here.
Thank you, Mike. A pleasure.